as part of your community, you have like a model where you model the price of gold, like a fair value model. I'd like to know, first of all, how are you doing that? And then what does your model at the minute say about the price of gold? Is it overvalued, undervalued?
Yeah, I mean, no surprises, it's overvalued according to the model. But the way these models work, all models are dodgy, right? That's the first thing to understand. You don't trust them. They come up with random numbers and you've just got to sanity check it. But with a fair value model, the way you approach it is you say, what are the drivers of gold? Well, the biggies are going to be inflation. Most commodities, they keep up in line with inflation. So one of the inputs is CPI, US CPI, the index. Another one is interest rates, because we said it's a wasting asset. If interest rates are high, that pushes down the value of gold. And of course, it's priced in dollars. So you look at the trade weighted value of dollar, which is the value of the dollar relative to its trading partners. So those are the three inputs. So strong dollar means weak gold or vice versa. So those are the things that go into it. Currently, the price of gold, I looked this morning, is $34.28 per ounce. The model says it should be about 17% lower.
Wow.
So overpriced, but not egregiously so. You know, it has been higher. But that is toppy, right? And that worries me because I've just bought some, you know. So that was part of a little experiment I've got with gold, which I can talk about later. But yeah, overpriced. But the thing about these models is that they're not predictive. They're explanatory models. Predictive models are much more difficult to make. An explanatory model is much simpler and really just tells you roughly where it should be.
So why is it 17% overvalued currently, according to your model?
Well, the model, I mean, the residual, what's left over is what those factors don't explain. And that's why the model's useful, because you can say, well, CPI inflation, interest rates, and the value of the dollar tell you it should be here. Whatever's left over is something else.
Is hype or frothiness.
I think one problem at the moment is if you look at the value of the dollar, it's been tanking. Like
Trump wants it to go down though, right?
Yes, but I don't think it was going down for good reasons. I think it's because people have been not trusting the US economy, not trusting the US to weaken the independence of its central bank. That was actually quoted as the reason why people wanted their reserves back into Europe. So I think, a weaker dollar is kind of disturbing, particularly when interest rates in the US have been high. Typically, it's US interest rates which drive the value of the dollar. If the US interest rates are high, then the dollar strengthens. What we saw recently is the opposite, and that is very, very scary because it shows that people have lost faith in the US, at least people outside the US have. Yeah. So I think that, dollar weakness and worries about the dollar, worries about debt sustainability in the United States. Every government, Democrat or Republican, basically doesn't care about the deficit. They just pretend that they can carry on spending more than they earn and it'll all be fine. People will keep on buying our debt. Well, that's true until it stops. So I think that's another worry, and gold might be a hedge against that. Because if the US Treasury market goes into default or people don't trust it, that's massive because it's the safest thing on the planet. So people are looking for other safe assets. So I think the safety bid for gold has certainly played a role, and the weakness of the dollar. So I think those are the two biggies at the moment. And lots of physical buying of ETFs not physical buying, but buying of physical gold ETFs in China. Lots of Chinese investors have been buying it. So, put it all together, central bank buying because they're worried about the US. A lot of people who are scared about geopolitics, again, that's fear, that's driving it up. And interest rates falling, that's also helpful. There's a confluence of many factors which have kind of pushed up the price of gold.
And then people buy things that go up in price, right? There's then that kind of FOMO or people momentum. Jumping into it, yeah. That was a clip from our conversation with Ramin Nakisa where we asked the question, is gold a good investment? If you want to watch the full length thing, you can do that right here.